Good morning. My name is Finley and I'm a producer at Clarion Gaming. I'd like to welcome you to this session, Special Purpose Acquisition Companies and Sports Betting, Perfect Synergies. This forms part of our ICE 365 sports betting series, which I encourage you to check out further on our website. I'd also like to welcome our guests, industry veterans and executives at Tekkorp Digital Acquisition Corp, Matt Davey and Robin Chhabra. Welcome to you both.
Good to speak to you.
Thanks, Finlay.
Great. So to kick off, it'd be great if you could tell me a bit more about Tekkorp, why you decided to form a SPAC, and how did you go about putting the team together?
Sure. So after selling NYX Gaming Group into Scientific Games in 2018, once that company was fully integrated, I set up an investment vehicle in 2019, Tekkorp Capital, with the sole purpose of looking at how do we deploy capital into this burgeoning iGaming and sports betting industry, but with a particular focus on the US market. And so we've taken active positions in both public companies and private companies. But when it came to companies of scale, we found there were two levels of negotiations. First, you negotiate with the vendor, and then you have to negotiate with the capital providers. Typically, we'd need a partner like a private equity firm. And that squeezed the value we found in the overall deal. So we had come across SPACs before, and the more we looked into the product, the more we felt that that was a really suitable product for this industry in particular. Not for every industry and certainly not for every company, but for this industry in particular. It's a really clever product with a lot of flexibility and some really attractive features built into it. So let me walk you through the thesis around why we thought that was great, and then I'll walk you through how we thought about constructing it. First, we have in the US market the fastest expanding sports and iGaming market in the world at scale. And when it's fully scaled, it'll be probably the largest in the world. So if you're a domestic gaming or sports betting operator or an international one that wants to be a meaningful player on the global stage, you really need to be in the US market. So that said, everybody else can see that as well. So this market is incredibly competitive. And so you need significant access to capital. So we have these private businesses growing fast, tackling the US market, but with significant needs for capital, not just to fund growth, but also to participate in mergers and acquisitions. And that's probably most efficiently done through the public capital markets. So you have this need from private companies, and then public investors are looking for high growth businesses with good compound annual growth rates that are sustainable and generate great revenues and ideally free cash flow over time. And particularly in this low interest rate world, that's become particularly apparent. So we have a need from private companies and a need from public investors, and a SPAC really look like a very smart way for us to do that. There are some other advantages to SPACs. We bifurcate the IPO process. We effectively go public first, raise the capital. There's not a lot to disclose because it's just cash. And then we acquire a business. And that allows us to talk about the future prospects of that business. We file a different filing called an S4 versus an S1 with the SEC. And that gives investors a really good opportunity to see what they're investing in for the future performance of the business versus what the historic performance is, which is what you typically see in an IPO. So there's some really interesting attributes there. In addition to that, we can be quite strategic in terms of structuring not just a single acquisition, but multiple acquisitions if it's needed, and do some clever things around that. So we think it's a very powerful product and one that gives us a lot of advantages for this industry at this particular time and space. So I wouldn't suggest this is the right solution for everyone, but we think it's a pretty powerful solution for the right kind of companies. So that's how we got into thinking about a SPAC. Then when it came to actually putting the team together, we didn't want just a bunch of ex-bankers, for instance. We wanted people that really grew up in the industry. And me in particular, what I was focused on was people I know, people I trust, people I love to work with. I think at this stage in the game, I'm pretty focused on just having a lot of fun and doing great things with great people. And so I thought of Robin. We had a phenomenal experience going through the OpenBet transaction where he was with William Hill and I was with NYX. And that deal was probably one of the hardest deals we've ever come across, and our bankers attest to that. It was a 6-month process, and you really get to see someone operate in the trenches going through that process. So it was a natural choice. And then, of course, he's a world-class M&A deal maker. There's no one better, to be honest, in my book. And then so he came on board as president of the company, and we also pulled on board Eric Matovich, who I'd worked with for 6 years at NYX. Incredibly trusted, really hardworking, knows his stuff, particularly when it comes to US listed businesses and land-based and online gaming in the regulated US market. So that was a great team. And then to supplement that team, we also put together a hand-selected board. We looked for individuals that could add real value in the key areas of good corporate governance. So in terms of accounting and finance, we have Tom Roach, who's the ex-head of global gaming services for E&Y. In terms of legals, we have Marlon Goldstein. He was the general counsel for the Stars Group and was part of Amars that went through that journey. In terms of really an authentic position in the game industry with a strong regulatory knowledge and an amazing reputation, we have Morris Bailey, who also is my partner on the capital side of things. And then to round things off, we had Sean Ryan join the board from Facebook to give us deep access into the social gaming sector, which was a core sector that plays to his strength, probably more so than myself and Robin's. So that was the thinking behind why we set it up and then how we structured it. Let me hand back to you. I think we'll go into a few other questions around the M&A process, for instance.
So how do you what do you feel you bring to a potential acquisition target, considering the heritage of the executive team and the board that you sort of just went through?
So I think the first step is we're authentic, right? We're authentic operators, and this is where Robin can really step in and walk us through all the thoughts around it. He's knee deep in it right at the moment. Robin.
Yeah, so look, there are a lot of SPACs out there, as you know, but very few people can provide the value that we can to the companies that we're focused on. We're very, very much focused on our own, this key swim lane, which is the online gambling world. And so clearly we have access to capital, but more than that, we're generally we're public company veterans. So a lot of the companies we are bringing are private companies. They haven't been in the public world. So in terms of attracting capital, attracting key investors, explaining the narrative to investors, retaining those capital market relationships, we've been doing that for years. But beyond that, again, these public companies have to deal with new governance structures which they've never dealt with before. That's meat and potatoes for us. We clearly understand their strategies. We can enhance their strategies. Quite often they will need to enhance and supplement their management teams. Clearly, we've worked with hundreds of fantastically talented individuals over the years, either directly in the companies we work for or through other commercial relationships, so we can bring those to the table. If we look specifically at the US, market access, that's not an easy thing to get, but we've built up relationships over several years. We know where to get market access. We know how to structure those deals. In terms of media relationships, obviously, we've got a deep heritage there, so we can give people distribution. So there's a lot of value we can add other than just providing them with finance. And again, with the team that we've assembled, which Matt has taken you through, there's very few people who can kind of match that value add that we can.
Great. And so in terms of the SPAC space, do you find it's quite competitive in terms of competition for companies and that kind of thing?
There are 400 SPACs out there, and it's growing every day. So on the face of it, you'd think it's very, very competitive. But again, we are very focused on a particular segment. And as I said earlier, there are very few people who can bring to bear the relationships and the capabilities that we can bring. So when it comes to the online gambling space, and actually with that focus on the US, and we bring a lot of US experience, that again, the level of competition narrows quite significantly. That said, there are 400 SPACs out there. It's a very attractive business. It's caught the eye of many people in the US and US investors. But I think when people understand the depth of value add that we bring, we always find ourselves, being at the top and near the top when it comes to people's shortlists.
Let me add two stats for you. So, there's over 400 SPACs that are out there today, and it sounds like a big number. Obviously, we're solving for a universe of one. We want one great business that we can bring forward with this SPAC. So we're not We're not looking to compete out there over a whole range of different businesses. Probably within that 400, there's probably half a dozen that have the kind of sector focus that we have. And obviously, we rate our experience and skill set and reputation in the industry over the rest. But in terms of the number, just the volume, there were over 8,000 publicly listed companies on US stock exchanges back in the early 2000s. There's now 4,000 or so. So you've seen this major contraction in the number of public entities are listed. It's halved. And so an extra 400 new companies to the market really is only another 10%. And so it's not going to make a huge difference. And public investors are really looking for choice. They want to be able to choose whether they want to invest in the expansion of online gaming through a pure play like DraftKings, for instance, or if they want a hybrid model like Penn National. So we think what we're doing here is adding significant depth back into the US listed companies. I'll give you another statistic, though. There were over 4,000 private equity deals performed in the US last year. So we're talking about not quite private equity deals, but they're similar. In fact, previously there would be some competition around that. So it gives you a sense of the scale of number of private businesses that can be bought in whole. And we're looking at effectively 10% of that market size. So while it sounds like a big number, it's really big only in the sense that there weren't that many SPACs before, not in the sense that we've flooded the market. And I guess our view, Robin and myself and Eric's view, is that the SPACs will continue to come to market, and there will still be significant opportunities as we go through this process.
Building on that, if you look at the European capital markets, there are 2 to 3 dozen listed companies focused on the online gaming sector. There's less than a handful in the US today. There's obviously Golden Nugget, Rush Street, Bet Genius has just floated, and of course there's DraftKings. So given the size and scale and the durability of that opportunity in the US, I think there's a real, we know from speaking to investors, there's a real demand for many, many more companies which are exposed to those tailwinds. Great.
So in terms of sort of the gaming industry specifically, so why do you feel like SPACs are being so widely adopted by the gaming industry? It'd be great if you could sort of go into that a little bit more.
Yeah, so let me take that one. Yeah, so I think it comes back to the attributes I spoke about before. So when you look at the US market, it's clearly incredibly competitive. It will be very large, but it's clearly very competitive right now. And so one of the huge demands that companies need to compete with is capital. And so particularly in the operator space, but also in the supplier space, there's a lot of product development, a lot of expense to get set up. The US is highly fragmented. It's not like the UK where you have 60 million people and one regulator and one set of rules. You have 50 states, and each state seems to have wanted to take its own approach to whether you can do retail or mobile or on-site registration or different tax rates, etc. So the investment side of it is really substantial, not just from a competition perspective, but also a product market fit. And that needs capital. So that's the first step. We think that there's significant demand for capital. The second step is clearly the public market values businesses in its high growth sector a lot. And we think that's highly attractive to private companies. We think that if you own a private business and it's of scale and can justify being in a public market environment, then you'll get a very good price by coming public today. So the public investing group will happily give you a very healthy valuation for your business. And so that's quite attractive, we think, to private operators. So we think that there are those dynamics there. I guess the third point would be that the market is growing rapidly. So a lot of the value is in the future once the market is scaled. And SPACs are a particularly good product to bring private companies that have embedded future growth into their business, more so than what the historic numbers would necessarily show. So we think those features make the SPAC product particularly attractive and SPAC sponsors particularly attracted to that market.
So yeah, keeping on the topic of scale, what scale of businesses are you looking to acquire? And is this limited to just the one deal?
So we've gone out and said we are looking for companies with a value of between $1 and $2 billion. That said, there's no real limit. As I said, there's a real thirst by capital market investors to put money to work in this sector. So if we wanted to actually bring companies to market which are bigger than that, we've got access to the investors who can make that happen. Just one thing that's worth clearing up, actually, and there's sometimes a misconception. We've got $250 million in the bank that will expand, as and when required, to finance the type of deal that we need to finance. But people often think of it as a fund. So will we, spend, 10 million in one company there, and $20 million and taking a minority stake in another company? That's not how it works. We're typically looking for a single company, a single, private company that will bring to market, which will effectively IPO by ourselves. You do see certain exceptions to that. Actually, in our sector, the most famous one is DraftKings. They wanted to take ownership of their own technology, so they also brought in SPAC to the party. So they merged, and then that combined business was presented to the markets. So that's something which is open to us. We're some of the most creative deal makers around. So we're not afraid of that complexity. But generally, we're looking for a single private company with a value in excess of $1 billion.
Great. Well, I feel that ties everything up. So thank you, Matt and Robin, for joining us. This will be part of our ICE 365 sports betting series, which will be available on our website. And thank you for watching.